Hey, what's up, everybody? I put this chart out on Twitter today, and I had a couple people saying, "Hey, why don't you do a video on this and just explain it real quick?" So that's what I'm gonna do. Uh, it's just a Bitcoin dollar Bitstamp chart. It's a weekly chart, and the orange line on here is the 55 exponential moving average, and that's one of the levels that I really look at for a kind of the broad market trend. So if we're above it, we're in a bullish market. If we're below it, we're in a bearish market. In just general terms. So as you can see, as you go through history here, the market's on a bullish move here. You know, staying above the 55 exponential. It wicked down right here. But we talked about filtering, and I'll talk about that in a second. But it wicked down right here, but stayed above it. But it wasn't until this point right here that it broke down and then retested. So right at this point, it became bearish, and then we've been in this bearish market, so we were working to the downside. Went a little bit more sideways here. Then we had a breakout above right here to where we had another inflection point where the price went back above the 55, worked its way up, tested right here, and I'll go into detail of what I'm looking at. But then we worked all the way up. We got into this area right here, tested, broke, tried to test back up and failed. So we stayed bearish, but it was internal momentum was really low, so we had a lot of consolidation. And then as momentum kicked in, the price dropped. So we stayed, we stayed bearish, but slightly bearish underneath the 55 here. Broke it back above the 55 here and got into a bullish market, and now we're back testing this again. So this is going to be a key major area that I'm going to look at to see if this market's going to flip one way or the other. All right, some of the other things I have on here. I have this trend line right here, and right at this point of break to the upside, if you look down, I got circles on here just to show you. This is where we broke the trend line, and then we also broke the 55 exponential moving average to the upside. So if you look at the internals, you have the ADX, which is the black line here, just starting to increase as the bulls were taken over. So as price was breaking through here, the internal momentum was for the bulls, so it favored that. So it brought support back to the 55 exponential moving average, and then we moved up. Uh, One of the things right after the break, as we moved up, made a high right here, uh, and then came back down. There's a wick right here that's tested the 55 exponential moving average. The interesting thing here is if you put the line right here and you look down, it's right when the red negative directional index and the green positive directional index were intersecting, right at that point. So remember that, and when I show you here in a second. So right after break, market went up and then retested the 55 and then continued the bullish run to the upside. Interesting thing is if you take the point of break up to the high, the 61.8% level right here was tested, and it matched up real nicely at the 55 exponential moving average and the intersection of the 61.8% level. And that's where some buying interest was found, and then we went back up, to close higher. Well, not higher, but wicked up for that week, and then we've continued to the upside. So this whole pattern right here is just kind of interesting. So if we fast forward to the next trend line, we had this trend line right here, and then if you look at the point of break right here, the same kind of thing was happening. The ADX was just starting to increase as the bulls were taking control, and it wasn't until the 55 exponential moving average broke to the upside that it really got some momentum going for internals, for the momentum for buying interest, and then it cranked up to the bulls here. Um, After the point of break, the first test of the 55, just like back here, we had the first break of the 55 to get bullish. This was the first key test of the 55. These didn't quite make it right here, but this is the first test that we're actually touching it. So the same kind of thing here as it came up, and now we're actually touching this. But if you take the point of break off of this trend line, just like we did back here, and then went up to the previous high before we tested, same kind of thing. If you take the low here all the way up to the high, and then we've tested, the 61.8% is intersecting right with the 55 exponential moving average. So we had a break and then a support test, just like we did back here, a break and a support test. So the interesting thing is when we looked back here on this wick to the downside, that's right when this was like these directional index lines were intersecting as ADX was dropping. So it was getting into a little bit more of a neutral market to, not so much that it was changing to the bears, but it was getting a little bit more, let's keep it bullish, but sideways. And as you can see, the market went, kind of sideways a little bit up. And it wasn't until, you broke to a new high where it went up here and then came back and retested as support that then it got really strong and then we went off to the races. So what I'm thinking is, and I could be completely wrong, but I'm just watching this as a pattern, is with the market testing right now, the 61.8% levels at 79.25. Market currently is at 80.38. The moving average itself is at 77.28. So in between 77.28 and 79.25, that range should find some buying interest to hold this line. Now we can wick under it, and then we get into that filtering, just like it did kind of back here. And sometimes it wicks down. That I talked about filtering in another one of my videos where I'd like to see at least, at least when it's a weekly chart, I'd like to see at least 2 weeks settling underneath the line, or maybe 3% underneath the line on a settle. If it gets 3% underneath the line, then I would consider it a break. These moves right here weren't quite 3%. But if it happens 2 consecutive weeks in a row where it settles underneath the 55, then we can have an ultimate change. But right now we're testing it as buying interest. So the interesting thing is as this is testing on the intersection of the 61.8% and the moving average, the directional index lines are also getting ready to cross each other, just like they did back here. They crossed right at the point where it was testing the moving average, and the ADX was dropping. ADX is dropping right now, and they're intersecting. So what I would like to see is the same kind of thing we saw back here when it was tested. Was if the ADX continues to drop, let's make sure that we go into a little bit more consolidation. So we'll move a little bit more sideways and stay just above the moving average and just above the 61.8% level. And then hopefully, as the ADX remains, if it's dropping, maybe it'll start to turn, and we'll see which one of these trends start to take over later on. Just like it took over for the bulls here, we'll have to keep an eye on this indicator to see which one's going to win out if this thing doesn't filter out and it remains support. Now, if it remains support and finds some buying interest, we should keep the bullish trend going, and hopefully we'll move our way back up to that previous 13.8, just like this one moved up to the previous high here, and then broke to the upside and got parabolic. And this whole pattern came with everybody talking about the halving. This was all happening prior to the halving. So this is all happening prior to the halving that's happening next year. So if this works out the way it should and this holds, we should work our way back up to 13.8 and then break to new highs as internal momentum kicks higher. So that's just the pattern I was looking at, and I just wanted to explain it to a couple people that asked. So hopefully you get something out of this video. And just remember, this 55 exponential moving average is pretty key. Now, if we do break to the downside here, minimum, I would think we could get all the way back down to 42.09, which is this previous low here. And that's just off the trend line break. If you actually move this Fibonacci level all the way down to the previous low, I'm roughing it in here. Theory is if you break this level, most likely you can drop all the way back down to the previous low. If the momentum stays strong. So the low 3000s could be a possibility. I'm not calling that right yet, but that's an area that I would look. But I do like to take, sometimes I like to take the Fibonacci off of just the break point. So that to me is the change in trend right there. So you can kind of look at the leg that happened as buying interest started to kick into the market. That could be a floor that you could look at to where buyers would get back in if the market dropped all the way back down. There are going to be a couple other levels to watch in here for support, for some support. You look at this, these lows in here before we broke to the downside. So kind of this area of breakdown right here. you're probably looking at about 6,000. So 6,000 could be the next area of support that could hold if it breaks here. But if momentum really kicks in strong, it might move right through it like it's not even there and look into the $3,000 and $4,000 range. So a break of this 6,000 would be the next level, and then $3,000 to $4,000 range would be the next level after that. But let's hope this internal momentum kicks for the bulls, and we start to find some buying interest right at the point that we should, and we'll go from there. All right, FiboSwanny out on Twitter. Any questions or comments, concerns, charts? Throw them out there. I will try to answer them if I can. And happy trading. Peace out.